Hello and welcome back everybody. I hope you all had great Christmas days. I'm back with a weekend update on the financial markets. We are covering, like usually, the S&P 500 index, US oil, gold and Bitcoin via price action on the weekly, daily and 4-hour time frame so that you know what to do with the markets the weeks and especially next year ahead. And I also want to share with you my results of this trading year so far. Let's further ado, start directly with the end results and then cover what we will do in the future. Here's the Excel sheet. I was feeding all the data, the returns on a weekly basis into this chart, starting with the 11th of August 2024. First, the blue line, my account balance, starting with 0% profits and an investment into an ETF S&P 500 index, also starting out with 0% profit. Then 18 weeks later of trading, ending with my last weekend report here on YouTube, I was able to achieve 18.84% and the S&P 500 made only 10.93%. The goal of this account was not to constantly outperform the S&P 500 index. I want to achieve a similar profit year to year like the S&P 500 index, but with less volatility and less risk, because an ETF can easily drop 20 to 30% in bad times, like a coronavirus or a war. And if you're only risking 0.5 to 3% per trade, it's unlikely to have such a long-lasting losing streak to end up with a minus of 20 or 30% in a year. So it's nice that I outperformed the market. I hope I can do similar next year because only the very, very good traders are able to outperform the market year after year after year. But that's the approach I'm taking. If you're interested in that, subscribe to the channel, leave a comment, and let's switch to the S&P 500 index on a weekly basis to analyze the next market movements. So back on the S&P 500 index on a weekly price chart, meaning that 1 week of price action is one candle here. Here we can see we're making higher highs and higher lows, so an intact uptrend, but one problem is left. We have here MACD divergence to price. So MACD is making lower highs while price is making higher highs. That normally means that a correction is in front of the door. Similar situation here, back in the days, we had higher highs in price and lower highs in the MACD. So a divergence, and what followed was the correction. That doesn't have to mean that the correction has to be that huge, like here. Back we had the bad news with war, Russia against Ukraine. I don't hope for something like that, but I think it would be enough to retest here this weekly uptrend line in orange solid. Keep that in mind. It don't have to happen directly, but we see the first signs on the daily time frame. Because here we can see a white solid daily uptrend line that got broken to the downside. And an indeed of an uptrend is higher highs, higher lows, higher highs, higher lows, and so far. And now we have seen a lower low, because that point here is lower than this one, and that's the first indeed of a shift in trend. That here could be the second sign, because that would be a lower high. So I am expecting that we will see higher highs and higher lows continuing to the downside, retesting at least this weekly orange solid uptrend line, and from there on hopefully continue again to the upside. Is this situation and this path tradable? Let's drop to the 4-hour time frame. Here you can see that the distance between the last low here and the take profit area, that would be our weekly uptrend line, is not that far. So if you take your trading tool here for short positions, and you would say you enter if price gets again below the last low here, and you set your take profit around the area of this weekly uptrend, and you put your stop loss above the last high, that's not a good risk reward ratio, which is 0.57. You want to at least have 1.5 or 2.0 or something like that, or higher. And because of that, I don't think that it will trade in this direction at the moment. You can decide otherwise if you go maybe some time frames lower, but I stay personally the lowest at my 4-hour time frame, where each candle represents 4 hours of price action. So I will wait and see if this movement happens, and then wait for the confirmation that we will see here a shift in trend again to higher highs and higher lows, and get there in another long position if possible. That's the one way that could happen. The other way is that we will see this, the lowest point of this movement, and from here on breaking out above this 4-hour blue dotted downtrend line, make a retest and break the retest to the upside. That as well could be a good opportunity to get back into the market with a long position, with a stop loss below either this movement here or below this one here, because that is the retest. And if we decide to take here a long position, that could act as our stop zone. That's it for the S&P 500 index. If anything changes, you will see it in my next weekend report. So update and subscribe if you don't want to miss something. That's it for S&P 500. Let's switch to US oil. US oil, I start here out with the monthly time frame. So each candle represents 1 month of price action. Here you can see the monthly red solid downtrend line. That one got broken to the upside, and since then we moved into a weekly consolidation here. For that we dropped to the weekly time frame. And here you can see that we built out a support zone for price here, because price was never able to get lower than this area so far. And then we also moved into a triangle breaking out above this downtrend line. If we drop to the daily time frame, you can see it in more detail. So far this here was the lowest point of the movement, and we had a daily solid white downtrend line that got broken to the upside as well before price then moved into another triangle. This triangle got broken to the upside and is currently retesting the breakout. And if we drop to the 4-hour time frame, you can see that this retest of this breakout got broken to the upside and retested again. So a lot of breakouts, a lot of retests, but I make sense of it, I promise. So if you zoom a little bit out here, so you get the full picture. Here was the weekly triangle, and this was the tip. We was breaking out to the downside, we retest to the midpoint of this weekly triangle, and then consolidated here further into another peak. We have seen the breakout to the upside. That normally means that we will continue into this direction if we stay above this tip here. And I was able to draw a 4-hour downtrend line. On this retest, it's not perfect because these candles are sticking out, but sometimes that's the most perfect as it gets. It's not always picture perfect. So because of that, I was setting up a trade here. That's not triggered yet. I placed my stop loss below this 4-hour retest and my entry point above this retest. So if price now will start to move into my favorite direction, hitting my entry point, my trade gets valid and I'm risking then 0.5% of my account balance, or a little bit over $500. Hopefully then price will move into my favorite direction, so to a long side, and my take profit would be below this monthly support and resistance zone here. That would be risk reward ratio of 2.5, so that's enough, and would give me a profit of 1.5%, nearly in my account balance. So, but what if that's not the case? If that's not the case, we will not get this trade triggered, and we will turn and make maybe even a lower low, because that one here is not confirmed until we see prices above this point here. So then we could expect an ABC pattern, another one, A, B, C. And then we would assume that this correction is then over. We draw another trend line above this ABC pattern and wait for a break above that to trade again to the long side. So these are the two scenarios. If we see prices not breaking out right now to the upside, then I'm expecting another leg C to the downside before then completing this ABC pattern and breaking again up higher or continuing lower. Then we are also not on trade, but I will keep you updated like every weekend on this YouTube channel, so stay updated and subscribe. That's it for US oil. Let's switch to gold. Welcome to gold on the weekly time frame. You can see price had a really hard time getting above this area here. This was a really strong resistance zone for price, but then we finally have been able to break it to the upside, made a correction, and then continued with a second really bullish move to the upside. But now we are a little bit elevated in the MACD indicator, even in comparison to past steam moves, and we had to cool down at some point. Now the question is that enough of a cool down, or do we have to see another leg to the downside before continuing the overall new uptrend? To answer that, we drop to the daily time frame. Here you can see this white daily solid uptrend line. This one got broken to the downside, and I was expecting after this MACD divergence an A, B, C pattern like drawn in here in blue. But what happened? We had like A, we had like B, and then where was C? We went lower and then higher and made a new high. So technically this now here becomes point B, and point C is still to wait for. It's a little bit of a messy ABC pattern. It will develop like drawn in here, but not all moves are picture perfect. So I want to trade this, but with less risk because it's not that clean, but more to that on the 4-hour time frame. Here you can see 4-hour resistance zone or support, because price bounced every time it comes down to it to the upside, and then we have seen a break, which is normally bearish. We are retesting it currently. I was able to draw also a 4-hour uptrend line into this retest that's currently broken and gets retested. You would better see it on lower time frames, but 4-hour time frame is for me the lowest I go, because I don't want to spend more time on screen, and you have to do that if you are also trading lower time frames. So I stay at the 4-hour time frame here, and I decided to get into this trade if we see price decline from here, breaking this small retest lower to the downside, and I enter the trade risking 0.5% of my account balance if we see prices again above this point here, and my take profit would be a sweet 3 to 1 risk reward ratio, with my take profit around this orange weekly uptrend, because I expect that price will turn here again to the upside in combination with this daily support and resistance zone. It can come to the absolute other direction. Maybe the best case, the trade will go as expected. The worst case will be we get lower, enter the trade, and then directly turn. The technical better entry would be below this point here. But then my take profit or risk reward ratio gets lower, and then I'm not willing to trade it anymore. So I'm risking only a small percentage of my account balance and choose the not perfect entry spot here. And then other scenario that can as well happen and wouldn't do any harm to my account balance is that we will see from here rising prices, and then my trade doesn't get triggered, and I can think about long positions again if we maybe see a break above this area here, probably about point B. That would be great, and there I could think about going long again, because the downtrend then is definitely broken. But that's the game plan for gold beginning next year, or even between the days. It could be possible that I get triggered here, and yeah, that's it for gold. Let's go to Bitcoin. There we are back at Bitcoin. Yeah, weekly time frame as well for Bitcoin. Beautiful chart, if you ask me. We had a long consolidation phase here that got broken, like in gold, finally to the upside, and then a massive surge. And now we are currently correcting. I think this arrow is right at this spot, because that's the hugest downtrend since we have seen a break of the $100,000 level. MACD also comes a little bit down, and we are nearing the 10-week moving average, which is great, because in past uptrends we also have seen sometimes price coming back to this moving average and then getting back into the bull mode, because I don't think that the bull run is over for this period, for this cycle in Bitcoin. And yeah, so I expect that moving average and price will near each other and then start again rising. At the daily time frame, we can see that the uptrend here is still far away. At the moment we are retesting the 0.382 Fibonacci retracement level, and we had a huge divergence in price. So this turn in price was expected, and I could imagine that we will see even lower prices from here. So maybe a break and then a retest of this daily dotted uptrend line here before then starting or continuing the overall uptrend again. If we drop down to the 4-hour time frame, you can see around this 0.382 Fibonacci level a support and resistance zone where price often got support so far and then bounced again higher. So if we will see a break of this to the downside, it will probably continue even lower. But no worries, on the long term, I think we'll get our chance again to get back in the market. Maybe we don't see this break. I would get again a little bit more bullish or open for long positions if we see price rise above this area here, because this is also a resistance zone, and if that one got taken out with the 200 moving average retested and again broken to the upside, that would be bullish. And then here around this area you can think again about long positions. But so far I'm expecting price more likely to cool a little bit more down and then continue the overall uptrend again. And we can think about getting again long if we see a change from lower lows and lower highs to higher highs and higher lows, and then get long again. Yeah, is there any more to say to Bitcoin? It was a great year for Bitcoin, for long investors. It was a pleasure, and for me as a trader also, or I'm both actually, so absolutely amazed by the development of Bitcoin. And now even the presidents and politicians and so are talking about Bitcoin. Back in the days, nobody believed it, and yeah, here we are. Yeah, but I don't want to talk longer than needed. Have a great start in the next year. This is the last update for 2024, and I can't wait to make the first episode in 2025. You hear me then. Bye bye. Stay tuned. Have a good one.